Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu. It is 3 o'clock in New York on Thursday, December the 10th, 2015, and this is the Daily Report for Gold and Silver. We do have quiet action, but quiet action to the downside in the precious metals markets, with gold trading nominally unchanged to nominally lower, down about 50 cents currently at 1071 and change. It has seen a low of 69.58 and a high of 76.54. Now, as we see on many occasions, the dollar, US dollar, is absolutely affecting the price of gold, and it's almost a dollar for dollar trade-off, but the opposite of what we saw yesterday. In other words, we have the dollar trading higher today, 97.96, and when we look at how that converts to a price in gold, you actually have dollar strength taking away about $6.20 on the day, and actual buying, there is buying in the market of about $5.90 currently, and that's what's giving us our net change of negative 30 cents on the day. So interestingly enough, as we begin to wind this week down and really get ready for next week, because of course next week is the FOMC meeting, that's when that gets underway, and we'll find out whether or not the Fed has decided to raise interest rates and to initiate liftoff, as they call it. And what we're seeing in our markets, meaning the precious metals markets, is really a slowdown. If you look at the last three trading days, those are these three candles right here, what we see is that although the market has had somewhat of a range, although today it has definitely consolidated, we've really had a basic support level that comes in at around 69, 1069. That's these recent lows. We've had some extreme highs. You can see this high at 85. Of course, we are short this market currently. Our position is short at 1078. Our stops are above these most recent highs, so they're above 88. And as I said, the market is trading quietly at around 72, although it is higher on the day today, but the dollar is compensating for that, very much like what we saw yesterday, only it was the opposite in terms of dollar strength and then dollar weakness. So traders, we're looking at a daily chart, but this chart has been converted into a Heikin-Ashi, or Japanese average chart. And the reason for that is I wanted to see if we're finally seeing any kind of red activity in the market. Of course, we had these lows that the market hit when the market went below 1050. We had these spikes up, but now you can see over the last three trading days, really what it amounts to is we've gone red finally. We've had upper and lower wicks over the last few days, and that, of course, would be bearish sentiment in the market. Now, the one caveat to looking at Japanese average charts is they are always going to lag behind the information that we get from other technical studies. And so traders, what I have done is I have converted that chart back to a standard candlestick chart. And in terms of the areas that we're still watching and looking at, this 1080, I believe, is a pretty critical number because it comes in at a Fibonacci retracement area. You can see that right here. And of course, these recent highs at around 1088. That's our current level of resistance. Now, support is still got to be pegged on these sets of lows here between just below 1050 and call it 1052 or 1053. So traders, just a couple of markets that we do want to take a look at before ending the show for today. First is to oil. Oil down 1.24%. $46 per barrel, and it's trading at 36.71. Tremendous dip in the marketplace. You can see that quite easily on this weekly chart. Let's go ahead and blow that up, but we've had a tremendous dip to a new low in terms of the marketplace in crude oil. And traders, lastly, I do want to cover a trade alert that I sent out this morning recommending initiation of long positions in the S&P 500 vis-a-vis the E-mini. At that time, the market was trading at 2063. We recommended initiating a long position and placing stops below the 200-day moving average. 200-day moving average at that point was sitting around 2058. Traders that took that call got long at 63, were stopped out at 57. taking a 6-point drawdown. Hopefully those who took that call also experienced the 20 5-point plus trade that we had just prior to this and the one before that. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the daily wrap-up and review on Friday. Bye-bye.